where's our interstate highway system? What are we leaving for our children and our grandchildren? Like we should do something big and important and meaningful that generations that come um, after us say, wow, that was great. Like I look at Eisenhower and I say, wow, what a great president. Look what he left for the country. But we are surfing the work of the people that came before us in a lot of ways. Um, the bridges aren't being maintained. Who built those bridges? Like we used to build stuff in America. It'd be great if we could start building stuff again. Not just dopamine inducing social media algorithms, but real stuff,
Real stuff.
bridges, roads,
Right.
you know,
And to do all that work, we're going to need an awful lot of reliable, affordable energy.
100%.
Welcome to Thoughtful Money. I'm its founder and your host, Adam Taggart. Markets tend to be inefficient in the short term, but efficient in the long run. In today's discussion, we look at the all-important energy market. Remember, without energy, there's no economy. As we look to the future, where are global energy trends headed? Which ones are we likely to turn to more to power the world of tomorrow? And where are the best opportunities for investors likely to lie? To discuss in depth, we're fortunate to sit down with the green chicken himself, the energy expert Doomberg. Doomberg, wonderful to see you again. Thanks so much for joining us today.
Adam, as always, great to be back. Great to chat with you before we hit record, and very much looking forward to what I know will be an excellent discussion today, because it always is when the two of us get together. And so I'm really, really looking forward to it.
Well, thanks, Doomberg. And I just have to say, you and I, we sort of got started around the same time in our endeavors. Yours has just been phenomenally successful, incredibly well deserved. Number one Substack, number one financial Substack in the world. Again, well deserved. Your team there just puts out phenomenal work. But it's always such a pleasure to have you come back on the channel here. I've had a lot of people since your last appearance asking me to get you back on. So thanks for coming. And if we can just roll up our sleeves or our feathers, if you will, let's just dive in.
You bet.
All right. Here's a tweak on the general question I like to ask folks at the start. What's your current assessment of the global energy markets?
Yeah, that's actually the single most important question we think macro analysts should ponder, because as you correctly mentioned in your introduction, the economy is a derivative of the energy sector, which is something that becomes apparent during energy shortages. And we're easy to sort of forget when energy is plentiful and abundant. And so the most important question we ask ourselves every day when we come in is, what is the state of the energy markets? Are they well supplied? Is the world long energy, or is the world short energy? And once you have that question answered, then the next set of analyses fall into place. Our view of the global energy commodity markets is that the markets are pretty well supplied, if not oversupplied in some sectors. And so if we take the critically important primary energy inputs sort of in order, the one that people focus the most on is oil, of course. We just saw a relatively flaccid OPEC meeting. It seems like the members of OPEC Plus are getting a little restless. They're seeing the production in the rest of the world continue to take share that they're leaving on the table. I would say that the readout from OPEC Plus underwhelmed what the market was perhaps hoping for, and we're seeing a sell-off in oil as you and I were recording this today. Other indicators that the oil market is well supplied include the sort of front month calendar spread is basically zero, 15 cents, 20 cents for WTI this morning. Crack spreads are very well in order, $25 a barrel. These are the sort of strong indicators that the physical market is well supplied. There are excess barrels of capacity on the sidelines that could come back on, and perhaps even an indication that the economy is softening a little bit, which one always has to ponder as well. Natural gas, the world is still in a glut of natural gas. We did manage to indicate that the bottom might be near in a piece we wrote a few months ago called Generational Arbitrage, when Henry Hub was at $1.50 per million BTU. It's up to $2.50 now, but prices are still negative at the Waha Hub in the Permian Basin, which is a nuance we can get into. Natural gas prices in Europe have woken up a little bit, $11 to $12 a million BTU on the on the back of an outage in Norway and also an underreported shelling of a major natural gas storage facility in Western Ukraine that the Europeans rely on. Coal is relatively balanced, $140 a ton, Newcastle, which is a pretty fair price for coal, maybe a little bit robust. There might be some stocking of coal going on in China, or perhaps a lack of rain. I haven't really dug into the coal markets too much, but at $140 a ton, no, there's nothing that screams crisis or shortage in those numbers. And so much like, I was re-listening to our appearance when we debated Adam Rosenzweig on your show. And we said at the time, absent a geopolitical crisis, that we would be relatively bearish oil in the next year, 6 to 9 months a year, because it looked relatively well supplied and there was a glut of natural gas. And arbitrages tend to close downward in a glut and upward in a shortage. And we're seeing downward pressure on oil, both WTI and Brent, and then upward pressure on natural gas as that glut works itself out. So scanning the globe, absent again, war breaks out with Iran in the Middle East, or China invades Taiwan, all bets are off, of course. But all things being equal, physical markets are well supplied and generally bearish the primary energy complex today.
Okay. And sorry, when you say generally bearish the primary energy markets today, what are some of the main reasons for that general bearishness? Is it slowing growth or rising supply or what?
We still have to work through the natural gas glut. So we would be generally bearish the complex, but we would be long certain contracts of natural gas. If you pushed us, we don't trade these markets, of course, so we can remain unbiased in our analysis, and we're not advocating for an outcome. The natural gas glut in the U.S. is the straw that's stirring a lot of the drink. We can get into the details, but the nature of the huge natural gas fields in Appalachia and Haynesville are sort of in a war with the associated gas fields like the Permian, for example, where natural gas is sort of a nuisance and is produced as a byproduct or associated gas. And what we're seeing is a bit of a slowdown in the production in the gas-only fields to make room for the production agnostic byproduct associated gas. U.S. natural gas inventories are at 25% above the 5-year average. I think some 600 billion cubic feet of natural gas in storage already ahead of the 5-year average. So we need to see some curtailments. We're beginning to see those curtailments by the producers who only produce natural gas. We're starting to see some switching as well. We're seeing I saw an estimate that Goldman put out, approximately 800,000 barrels per day of diesel supply has been shifted to natural gas in China, a combination of CNG and LNG long-haul trucking. That's having a dampening effect on the market. The growth in renewable diesel, even though it's small, these materials are pretty inelastic. And so a couple of 100,000 incremental barrels of renewable diesel hitting the market does also drive down prices. So would be long or be interested in, we would say prices are probably have to go higher in natural gas. The generational arbitrage will close. And if there's no geopolitical outbreak of consequence, then oil probably has some room to drop.
Okay. I want to get in today's discussion to a pretty far-looking outlook from you. As I mentioned in the intro, markets are inefficient in the short term, but efficient in the long run. I'm sure there's lots of things going on today that are responding to what will be relatively transitory conditions. And I'd love to get your thoughts on looking out kind of decades, what your outlook is for the major fuel types, as the efficiency of the long run really determines which fuel is best for which use type. Before we do that, just a quick question. We have a presidential election coming up here in the U.S. In November, and the two leading candidates have very different outlooks when it comes to energy. Well, I guess if you could just summarize briefly, what would you expect? Assume a Biden reelection. Assume what you would expect the priorities of that administration to. Would they continue to be status quo? Would they evolve at all? And then what do you think the priorities of a Trump administration would be in contrast to what we have right now?
So I'm happy to engage in those hypotheticals. I would say that in our view, the election is one of those unquantifiable geopolitical risks, because we suspect the outcome will be such that half the country won't believe it, no matter who wins. And that presents a serious political risk to markets and to the energy sector, and no security would be immune from a civil war in the U.S. And look, let's be honest, we're not that far from it. We just had the leading presidential candidate of the Republican Party convicted on 34 felonies by, you know, we don't need to get into the views on that matter, but just objectively looking at it, that's not something you expect from the United States of America. And so if Biden wins, let's just imagine that there's a peaceful election and both sides accept the outcome for the purpose of this analysis, but that is not our base case. The oil and gas industry does much better under Democratic administrations because the oil and gas industry is prone to overinvesting when they're allowed to do so, and they make all their money when the markets are short, which happens when Democrats are in charge and incremental drilling becomes more challenging and permitting becomes more challenging. They way more than make up any lost volume on price, which is, of course, the core of our sanctions will backfire argument as well, which is we need to be flooding the world with oil because we'll drive the price down, and that will starve Putin's war machine of the funds it needs to build his weapons and so on. So if Biden wins, I think that's bullish oil price, bullish oil equities, all things being equal, because the harder it is to drill for oil, the more expensive it is. And the more expensive oil becomes, the more money these companies make. The oil and gas industry is characterized by a complete and utter inability to discipline themselves and to be reasonable caretakers of the market. The one thing that oil and gas companies know how to do is drill. And they drill. And they do it. This is why it's so cyclical. This is why oil is at an inflation-adjusted price of $24 a barrel today, which is cheap. In fact, I was just looking before we came on, as priced in ounces of gold. The only time oil was cheaper in ounces of gold was during the COVID period, throughout the last 50 years at least that I can find on my Bloomberg terminal. So oil is incredibly cheap. The oil industry is an amazing deflation machine. In fact, what's going on in natural gas today is all of these pure play natural gas players in the Marcellus Shale, for example, are learning how to produce natural gas for ever cheaper prices because they have to, because the prices are so low. And so when we come out of the supply glut, the floor of the price they need to make a profit, it will be much lower than it was going in, which is always the way in this sector. The technological innovation in the oil and gas sector is amazing. So they will overproduce and crash prices, and that's what would happen if Trump came into power and he opened up the spigots of permitting and demanding that the federal government take their thumb off the scale. And it's counterintuitive. So I would say Trump is good for volume, bad for profits, bad for price. Biden is good for price and bad for volume. But if you had to choose between the two in the commodity sector, you take price over volume every time.
Okay. If you were a producer, you're saying?
Or if I were looking to get long the equity of a producer, yeah, this is what I would be.
Yeah. Okay. All right, and we'll revisit this later on, but okay, so interesting. In a Trump administration, you would expect oil and maybe fossil energy producers in general, their stocks to fare less well.
Drill, baby, drill is not accretive to the equity values of oil and gas producers. And so this is the big counterintuitive thing. Like most oil and gas executives are conservative, libertarian, probably. I would guess that if you took the operators in the Permian, they'd probably vote 70-30 Trump, at least. But they would be voting against their economic interest because, look, the industry has no history of any discipline, right? If left unfettered, they will overproduce. And they always have. This is why it's cyclical. This is why the cure for high prices is high prices, and the cure for low prices is low prices, right? I mean, these are sort of cliches in the commodity world. If the oil and gas sector had any semblance of a track record of, and by the way, it's just amazing to me that the FTC accuses the CEO of Pioneer of collusion. You know, oil has never been cheaper. Like they're not capable of colluding. OPEC can barely keep itself together, right? We're going to see strains in OPEC discipline, and that's an overt collusive group that is meant to manage the price of oil higher, and they could barely keep it together. They have days-long meetings where they're arguing over who gets what allocation, and there's cheating going on, and the temptation to grab the marginal dollar is irresistible to these people.
Okay, so just if we so sort of inverse relationship of oil production versus the performance of oil and let's maybe say fossil writ large equities. Is there also an inverse relationship between oil supply and actually no, it would be a direct relationship between oil supply and economic growth? Would we think that this higher volume, lower price would result in greater economic growth?
Absolutely. Yeah, sure. If a price spike in oil causes a recession, then logic would say that the inverse of that. So Trump administration, great for oil volume, bad for oil equities, great for the rest of the world, the rest of the economy, right? Look at natural gas in the US. It's such a boon for manufacturers, all those cogeneration facilities, fertilizer producers. Their input costs are de minimis compared to the rest of the world, and they have a global advantage. This is why I think we've had a easier time avoiding a recession than many, including us, would have predicted last year in the face of 5% interest rates and so on, because we do have this amazing supply of cheap hydrocarbons. We are swimming in cheap hydrocarbons in the US. Even at 250 a million BTU natural gas, that's $15 a barrel of oil. That's a huge advantage for the country. Not only cheap, but ready access to supply, very reliable supply. We have an abundant amount in storage. These are bedrocks. And so again, back to the original question, if we're oversupplied in energy, that's bad for energy equities, but that's good for the rest of the economy.
Okay. And I guess conversely, let's say status quo prevails, current administration gets 4 more years, you would expect supply to be more constrained than under the alternative. I've had a number of people on this channel who have talked about potential supply issues that we're going to have in a lot of commodities because of underinvestment in CapEx from 5 years ago, 10 years ago, maybe even further. So if the current status quo continues for the next 4 years, could it be a great run for oil stocks? But could we eventually get to a point where we have real supply issues just in terms of powering the economy?
I don't think, we're always susceptible to a crisis because the elasticity of primary energy is very profound. So I don't want to say it's impossible. It's inevitable, but it doesn't seem to be on the horizon today. And when we think about, we've seen such analyses, right? The thing about underinvestment in capital that is not captured is the technological improvement, which is compounding. And so the capital efficiency is ignored. A dollar of capital invested today is different than a dollar of capital invested 5 years ago because of the technological innovation that is perpetual and ongoing in the global energy patch. Like I was perusing some oil drum posts, from the oil drum, a blog post from 15 years ago, doing some research on the Marcellus Shale, and a pretty high profile analyst who was particularly let's say, objecting to our call about cheap oil wrote a very long post. I won't, it's lots of posts out there. Everybody gets stuff wrong sometimes, but predicting that the Marcellus Shale would never produce economic natural gas. And it only went on to be twice the size of Qatar, right? Like it's the biggest natural gas play in the history of the world. And right now you can produce a million BTU of natural gas in the Marcellus for probably $1.50 marginal cost, a million BTU. It's insane. The technological power of these companies is profound, and it is often underestimated by people who are, it's kind of like a survivorship bias, but in reverse. Like you look at all the companies that survived and that are still trading. Well, of course, they look great historically, and because you're ignoring all the ones that have killed. But when you look back at historical numbers, any historical numbers in the oil and gas sector, you are automatically underestimating the technological impact of what that dollar invested in 2010 means in 2024.
Got it. And I remember from your debate with Adam Rosenzweig that this was a big part of your optimism for oil continuing to be relatively plentiful and affordable for the next many decades.
Yes.
But one of the reasons why I asked this question is we've seen headlines over the past couple of years of oil execs, sort of kind of refusing to make big capital investments right now because of the whole green energy movement. Like they're not sure if they're going to actually even be allowed to reap the benefits from these investments in 10, 15 years time. And those are the types of investments that are needed today. And so some people have been saying, well, then we're going to have a big oil shortage in the future because of this. But I think you're saying you're not terribly worried about that because you think technology is going to make up for a lot of the gap.
But also, I think you're potentially listening to a small subset of publicly traded companies who might want to put a certain message out and ignoring the vast world of private investment that's going on out there, both in the US and around the world. There's a lot of energy bulls that have a desire to have their biases confirmed. Look, we are analysts first. And so, by the way, like if our political policy were adopted, it would be very bad for the oil and gas energy sector. We believe that we should overproduce primary energy because energy is life, and that is the baseline for standard of living. And so, if we came to power, I mean, oil prices would probably go down. There's two really important things that you need to consider when you study the energy market. One I've already referred to, which is elasticity, and the other is fungibility. And fungibility means that you can do the same work either by transforming one of the energy inputs into a molecular replica of the other, or changing the engine that's doing the work to accept multiple primary fuels. And so we're seeing this drive, and we've articulated that we're literally forever changing the definition of oil. And so to your question about decades ahead, ultimately everything will be oil, and they'll all roughly trade for the same price, corrected for logistics. This is the impact of crises is to accelerate that timeline. So let's just take natural gas in the US, for example. We put a piece out called Generational Arbitrage, where we said this is how the natural gas glut in the US will resolve. We had a chart in that piece where we showed the ratio of the WTI price divided by the Henry Hub price. On an energy basis, it should be 6. Historically, it's traded between sort of 9 and 15 to 20. And at the time we wrote that piece, it was trading for 40. So in other words, oil was 40 times more expensive, just dividing their prices, when they should be 6 times as expensive. Well, people are going to change the engines. Like, they're just going to change the engines. Like, you can't give away natural gas indefinitely when the work of diesel can be performed by natural gas. There comes a price and a supply availability where you will see enough intra-market penetration where then the power of elasticity kicks in and these arbitrages close. And right now, that gap, that alligator jaw is closing. I don't know what it is today, probably around 25 or 30. And it doesn't take much. So the elasticity argument, if 5% of oil demand was satisfied by natural gas, that would be enough to move the price a lot. Joe Biden dumped 1% of global oil demand out of the SPR for 6 months, and he cut the price of oil in half. The elasticity is really powerful. So the wider the crisis, the quicker the spread closes via technology and investment, capital investment. So when you're talking about capital investment in production and exploration, there's also capital investment in the engines downstream that are allowing for incremental supply of natural gas to be consumed and displace demand for gasoline or diesel. It's happening. It's real. It's possible. It requires no inventions. It's a pure capital investment. So when people are talking about the lack of capital investment for exploration and production, they're ignoring the capital investment to make use of this superabundance of natural gas that we have, which is an indirect way of basically capital investment to relieve the price gap of oil versus that natural gas. All hydrocarbons are burned to create heat to do work, except for, the subset of them that end up becoming chemicals and materials, but that's about 6 or 7% of the market. The 93, 94% of the hydrocarbons in the world that are produced are burned to create heat to do work. The people who are getting that work done don't care which hydrocarbon is at the beginning of that process. They just care about the work being done. And they will switch. They will change the engines.
All right. And it's a part I just want to really note here for viewers to make sure that they all get this, which is, it's the unlocking of the energy in the hydrocarbon chain that we leverage here. And, you're basically saying, look, there's 2 things that, 2 important trends that maybe don't get enough airtime. One is the fact that there's increasing technology that is, we'll call it maybe similarizing the hydrocarbon chain. So like, I know when you were on last, we talked a bit about the condensates, the natural gas condensates, which can be, put into refineries and used very much the same way that all the other oil inputs that go to refineries are. And then secondly, as you're saying here, there's a way to upgrade our technology so that it can burn multiple hydrocarbon fuel input types. Not too dissimilar to the way a hybrid car, will take a gas, right? So it's taking the petroleum hydrocarbons there and the gas, or it's taking energy, electricity in its battery, which could have been created via a whole bunch of different type of ways. It could have been hydropower. It could have been, really anything that generates electricity. So, we have the ability to take our motive power and connect it to multiple different fuel in types. It doesn't have to just be optimized for one particular fuel in type. Did I summarize this correctly?
That's correct. So the way in which we use the hydrocarbon menu available to us today evolved from the fundamental nature of the fuels. So coal is a solid, it's easily stored. Power producers like that. They make giant mountains of it. Doesn't cost them anything really to store the thing. Natural gas is a gas, it's harder to handle. Oil is a liquid, it's easily pumped. We can use it in our cars if we refine it to gasoline or diesel. The way in which we evolved was mostly out of convenience, but as technology changes and we learn how to safely handle natural gas and we learn how to convert an internal combustion engine to be run on compressed natural gas, there comes a point where the price differential corrected for energy content will drive adoption and change. Like the economy is a deflationary machine, right? And so just to give you a small example, virtually every home well, not every, a lot of homes in the northern part of the US have natural gas hookups already at their house, right? You can imagine installing a CNG fill up at home machine. They exist. They're a little expensive, but at the right price. And then you could fill your tank on natural gas. And Honda used to sell a CNG a Honda Civic back in the early 2010s. That it's just people didn't buy it because the infrastructure is not there and it wasn't worth it. But there's tens of millions of CNG passenger vehicles on the road today around the world. China, as I mentioned, is changing to natural gas. A perfect example would be, say, at docks where you have a very confined route where they're using diesel today, they could switch to natural gas very easily. Cummins has got a new 15-liter engine that's already a bestseller in China that they're bringing to the US market this year. They will switch. It doesn't take much. So the second part, look, there are two fungibility factors. There's chemically altering them to replicate. So you can take natural gas and make, gas to liquids. You can make the equivalent of a diesel or a gasoline product using various well-known, decades-old technologies. That's being done today in parts of the world and could be done. The second is just changing engines. But the overarching point is you don't need much in the way of fungibility because of this elasticity factor to materially put a ceiling on price. And so 1, 2, 3% displacement adds up, and it's pretty material. A 5% shortage causes primary energy prices to spike, and a 5% glut causes primary energy prices to go negative. We see negative prices in the Permian. We saw negative oil prices in the aftermath of COVID because the storage units got full. The inelasticity of primary energy, because of its critical role in our standards of living, is such that it doesn't take much. So the fungibility, there's no technical innovation required. It's literally just financial investment, and that financial investment will happen the wider the arbitrage.
Okay. And so we've had an awful lot of really cheap natural gas of late. Is that driving a lot of innovation right now?
Absolutely. Yeah, we profiled Liberty Energy in one of our pieces. There's a huge build out in natural gas power plants going on. I think the AI revolution is sort of mixing into all this. And I know we're going to talk about nuclear and other sources of energy later. But yeah, primary energy, if it's abundant and cheap, will be used. The exact manner in which it will be used can be somewhat difficult to model, but we won't have negative natural gas prices in the Permian forever. And in fact, natural gas is actually stunting the growth of oil production in the Permian if you drill down. And back to the whole NGL, natural gas liquids that we talked about before, the top company companies in the midstream is Phillips 66. Read a great blog post at RBN News, which is a great energy blog that people should subscribe to. They have all these refineries on the Gulf Coast, and they're building out the ability to take, to take gas and NGLs out of the Permian, which thus enables more oil production. And they're feeding those NGLs. Some of it's being exported, but a lot of it is going into their refineries because they could use it, and they could. It's cheap, and refiners like to buy cheap stuff. And so they find ways to use it. And this is all going to happen. You can't, again, this gluts resolve, right? Crises of supply resolve. This is the century-long one knowable fact about primary energy is gluts and supply crises resolve. They work their way out. And this glut shall resolve. It was impossible that natural gas would stay at a $1.50 million BTU at Henry Hub indefinitely, and it hasn't. It's still dirt cheap. Canada's, I was just checking before we got on, in Alberta, it's 70 cents a million BTU. This is just an amazing molecule. We do great stuff. We cook with it. We heat our homes with it. We can power our vehicles with it, and it doesn't take much to put a ceiling on the price of oil. So this is the fundamental view that we have. It's a model that works quite well. Again, absent the geopolitical crisis, the world is very well supplied, and when the world is very well supplied, prices come down.
Okay. All right. Well, we've maybe mentioned several things that will maybe you'll reiterate in your next answer here, but to the long-term view, where things equilibrate to using fuels for their best suited purposes. I've been thinking of it as an analogy as a football team. I think you might have a slightly different way to think about it, but just like on a football team, you have all these positions that are, different in purpose, and you're trying to find the best player whose talents match that position's requirements the best. If we're looking across the playing field of energy fuels, both on the fossil side and on the green side, each fuel has their own strengths and weaknesses. How do you see this playing out in the long term? In other words, like where do you see us investing more over time, and which areas seem best suited to which fuels?
So I thought about this analogy when you sort of brought it up that you might mention it. And here's how I would look at it. You're the GM of a football team. You have to field 11 players, and you have a salary cap. So in that circumstance, you want to have players that can play multiple positions. You want to improve the fitness and strength of your players, i.e. technologically investing in the production and availability and logistics of that supply. But you must field 11 players. And so, and you have to do so under the salary cap. And that salary cap is shrinking every year. So what do? And by the way, both sides of the ball, 11 players, right? So your offensive lineman gets trained on how to be a defensive tackle, and your corner gets trained on how to be a wide receiver. And some players are purely positional and can only do one thing. Well, they're less valuable, like a place kicker, for example, that probably can't, isn't going to be rushing the quarterback anytime soon. But if your place kicker goes down, you have to put somebody back there. So training one of the big fellas how to kick might be useful. So this is going on all the time. Chemists are learning how to more efficiently convert natural gas into oil products, coal into oil products. All of these things can be burned to produce electricity. You wouldn't really want to burn oil to produce electricity, and you'd rather not burn coal because natural gas is so much cleaner. But you could, in a pinch, that tackle could play offensive line. That that running back could probably go out to wide receiver. You want to train your players. You want to get them stronger. This is what science is doing. This is what investment is doing. This is what the ongoing technological progress in the area is. And over time, in the long run, all the players will be able to play all the positions. And then they will all have the same salary, and it'll be pretty cheap. That's my view of the football analogy. The best I could come up with on short notice for you, Adam.
Okay. Well, let's maybe look at well, let me ask this. Are there fuels like nuclear? I'm just going to pull as an example. I know that you are philosophically quite pro-nuclear. do you see it as inevitable that nuclear is going to be a bigger part of the energy mix than it is today? And if so, for what type of uses do you see it best suited for?
So this is a great example. Today, predominantly, given the reactor designs that we have implemented, nuclear power is mostly just an electricity producer. We could decide to co-generate industrial grade heat and take out a lot of the carbon emissions that are used in some of the more intense industries where high grade steam is required to do production. That's an example of training up your technology to perform multiple tasks, right? Today, nuclear is kind of siloed to just being electricity producer, and electricity is a fifth of our energy budget. And so I would argue that natural gas is far more flexible than nuclear today. You can burn it to create industrial grade steam. You can use it as an input to create fertilizer. You can, you could make electricity with it. You can transform it into gasoline and diesel and stuff. Like the cleanest burning, most flexible hydrocarbon is the cheapest one on the board, right? And so you want to draft that player because you could do a lot with it. And so, to nuclear, we are seeing a nuclear renaissance. We're writing about this in a future piece. We paid great attention to Jennifer Granholm's speech in Georgia, where she said that the Vogtle reactors are 2 down, 198 to go. That's a serious about face by the Biden administration. I think it's very bullish for the nuclear industry. I think there's some things that have to happen to make that dream come to reality, but they're possible, they're doable, they're political choices. Especially if you are demanding that we reduce our carbon intensity, there is no real path to get there without nuclear. If we loosen the assumption that we care about carbon intensity, then there are scenarios where we might not need as much nuclear as I think we should have. But nuclear is superior by all measures to virtually any fuel, with the minor exception of the current designs don't yet produce, at least the ones we have in operation, don't produce sufficiently high quality steam to be industrially useful. But as far as like an energy source goes, an electricity source goes, energy density, security of supply, the price of uranium could double or triple and nobody would care. The price of natural gas doubles or triples and you see it in your electricity bill immediately, right? And by the way, this whole concept of nuclear waste is such a joke. Nuclear waste is actually just fuel for the future. We only use 5% of the energy embodied in a uranium fuel rod. You could run those through a fast breeder reactor and get just as much energy back out again. You could recycle it. Nuclear waste is a gift to the future engineers of the country because they have a ready-made source of unlimited power, basically. This is all just bad branding by the nuclear industry. So I'm very deeply bullish nuclear, if only because we don't think that the carbon insanity is going away anytime soon, but also just inherently it is a superior form of energy, and we should be actively producing as much primary energy as we can, all of the above.
Okay, and you have very directly said on previous discussions we've had that it's a lot easier to remove or resolve a political constraint than a geological one.
Yes.
And it sounds like you're saying that we are seeing some real-time removal of political constraints going on in nuclear in the U.S. today under the current administration.
Yes.
I know I just literally, I think it was like a week ago, shared on Twitter sort of very pro-nuclear position statement put out by the White House, really claiming nuclear as a green fuel, which I know you've said for many years that nuclear is going to fall under the green umbrella. I think maybe it now officially is. Would love to hear any additional commentary you might want to add around that. But my question is assume for a moment that we have a different administration by the end of the year. Do we have a sense from Trump's previous time in office what his position on nuclear is?
It's a great question. I can't say that I know directly what his position on nuclear is, but given his desire to be a sort of pro-energy supply, pro-economic growth, pro-free market capitalism, I can't imagine he would be opposed to it, but I don't know. Politics is not something we indulge in too often, only out of necessity, but if I'm wrong, I'm sure somebody will correct us in the comments, but I think the momentum behind nuclear is a bipartisan one. And I think regardless of what happens at the presidential level, we are seeing significant movement in the administrative part of the government, which is probably more important than the executive branch at this point, even though the executive branch in title oversees it. In reality, that's not how it works. But I will say, by removing the political constraint, now we are just we're moving on to the other constraints, and those include supply chain. We need a far better domestic supply chain for the nuclear industry, and a labor force constraint. We need to start training up technicians and really good high-paying jobs that last generations in these nuclear power plants. Those are very manageable constraints, but they're the next ones we'll have to confront to make the nuclear renaissance, to convert the momentum behind the nuclear renaissance into gigawatts online. And I did listen very carefully to Granholm's speech. I listened to some follow-up testimony she gave before Congress. The political part of the constraints seem to be on their way out. And now we have to roll the sleeves up and do the hard work of supply chain and labor force development. But those are great problems to have.
Okay, and sorry, I don't mean to rat hole in nuclear, so I'll make this the last question. But is it the FERC? Is that the organization that's
the NRC?
The NRC. And I know that sort of up until now, that's been oftentimes looked at as like the greatest deterrent to progress in the nuclear industry, has been the regulatory agency overseeing it. Is there a shakeup there going on as part of this
There is
reevaluation?
Yeah, there is. And, we had a guest on our Doom Zoom for our pro tier, James Krellenstein, who has a different view of the NRC's role in this and perhaps a more favorable one. But regardless, the outgoing head of the NRC was not renominated because of these types of objections, and Biden conceded on that point. And so I think the administrative state is beginning to get behind the concept that nuclear is green. And in fact, I've heard rumors that some of the more famous environmental organizations have sort of stood down on this fight and have let go their anti-nuclear wings. There've been some restructuring in this space, which you and I probably aren't paying as close attention to as perhaps we should. But the signs are that the old Malthusian anti-nuclear extremists are having a less and less voice, a smaller and smaller seat at the table. The industry needs to deliver. The Georgia nuclear expansion was a fiasco, both from a budget perspective and a timing perspective. Lots of lessons can be learned from that. Lots of reasons why that was a fiasco. But Granholm said 198 to go. That's the title of the tentative title of the piece we're working on to cover this issue. 200 gigawatts of nuclear is would be an amazing thing. Now by 2050, of course, and she's writing checks that other people have to cash. But that's a complete 180 from where we were a decade ago. And that's great. It's good. Like reflecting on the good news, we're glad it came in. Now let's get to the next step of doing the heavy lifting to make it happen. Because again, once you have a nuclear plant on, they're good for 100 years. I mean, these things are indestructible. This is truly the opening story that we're working for this piece, 198 to go, is the build out of the U.S. national highway system, right? The interstate highway system. This was an Eisenhower initiative coming back from the war. He saw the Autobahn. He thought we needed this in America, both for economic prosperity and for national defense. The ability to quickly move the military around the country with speed, he thought would be invaluable to defend the homeland. The payback on what amounts to a public works project of epic proportions has been incalculable, right? Could you imagine America without the interstate highway system today? There'd be no Amazon without the interstate, right? And this is public work projects should be supported, can be done well if we are disciplined about it. And I think a massive build out of nuclear power needs to be done with the same mindset. And it can be done. There's a lot of pessimism in America today, rightly so, by the way. I mean, we're as cynical as the next person, but there are a lot of positive things that could go on here too, and we should advocate for those. A build out of nuclear power on the scale that Granholm is proposing, and we applaud her for it unabashedly, would be akin to the equivalent of a national interstate highway system, and we should strive for it.
I mean, we talk a lot about things on this channel that are concerns, and you mentioned, pessimism is something that's quite pervasive these days. It's great to have some optimistic elements of the future to look forward to, and you understand this much better than I, but from what I understand, I agree that this would be hugely contributory to economic growth, economic sustainability, society, quality of life in general. Now, there's a lot that would have to go along with that. I've got 1,000 other questions about nuclear, but we'll have to save them for a future date. But I do know as part of this, right, is one of the big limiters of nuclear right now, at least in America, is pretty much every reactor we've ever built in this country has been a one-off, right? We haven't been able to benefit from economies of scale and from modularization to be able to deploy more quickly, to deploy more cost effectively and whatnot. Presumably, if people are thinking, hey, 198 reactors to go, that might finally open the door to this type of standardization, correct?
Yeah, look, France built out the same reactor over and over again, did so in record time. China has a few designs that they're sort of competing and running. The case study on how to do this is Canada with the CANDU reactor design. Look at the province of Ontario. It's the cleanest grid in the world. They're building out nuclear still. The things we need are a standardized design. Here's the thing. The industry gets in its own way a lot. A standardized AP1000 Westinghouse reactor is way more than good enough for whatever we could possibly need. Yes, the seduction of SMRs and new technology this reactor it's impossible to melt down, and these are all angels on the head of a pin. Like, this technology was cracked 60 years ago. France built out 70% of its electricity supply from nuclear in the 70s. Trying to tell me that we can't do better than France 50 years ago?
Right.
I mean, these are not technological issues. These are political issues. These are societal challenges. And look, where's our interstate highway system? What are we leaving for our children and our grandchildren? Like, we should do something big and important and meaningful that generations that come after us say, wow, that was great. Like, I look at Eisenhower and I say, wow, what a great president. Look what he left for the country. And that outgoing speech warning about the military-industrial complex couldn't have rung more true today. It aged very well, or poorly, depending on your perspective. It aged poorly because it was so accurate. Where's our interstate highway system? I mean, you could argue the internet, data centers, AI, and
right.
And that's plausible. I could see that. But we are surfing the work of the people that came before us in a lot of ways. The bridges aren't being maintained. Who built those bridges? Like, we used to build stuff in America. It'd be great if we could start building stuff again. Not just dopamine-inducing social media algorithms, but real stuff. Bridges, roads.
Right. And to do all that work, we're going to need an awful lot of reliable, affordable energy.
100%. And skilled tradespeople, which we should be producing more tradespeople than liberal arts degrees.
Well, that was my next question. So we've actually talked a lot on this program about the challenges that are facing both people in today's job market, but certainly facing the younger generations. There is a lot of crap work out there these days and diminished job prospects, but not in every sector. And from what I take from you is that if somebody's willing to consider working in the energy trade or working in their functional area, whether it be marketing, legal, data, whatever, there's going to be plenty of demand for all of that in the energy space, given all this opportunity and need going forward.
All I hear from small business owners and entrepreneurs is an inability to find people willing to work. Like, be a plumber, be a carpenter, work in the oil fields. If you're willing to put in some sweat and some elbow grease, you could easily make 6 figures in this country. There's no shortage of 6-figure jobs to be had for people that are willing to learn and willing to work hard.
Let me just ask, in this energy space, I presume there will be some fungibility as well. Like, energy is sort of famously a boom bust business, and you were talking earlier about the oil industry just not being able to self-govern itself, right, when it comes to production. But presumably, if you've got a good paying job in some part of the energy sector and your part of the energy sector starts experiencing a bust, odds might be good that another part of the energy sector is doing okay, and you could transfer over your skill set to that one too, right? Is there that fungibility of talent?
Fungibility of desire to work. If you are willing to learn and willing to work hard, there is a shortage of such people in the country. There always sort of has been. I talk to a lot of small business owners. We consider ourselves a small business owner. I think you would consider yourself a solopreneur, I believe is the
Absolutely.
word.
It's about as small as it gets. Yep.
Right. You know, we do a lot of the things ourselves because finding help. You and I met in person recently. We were privileged enough to host you here in the Chicken Coop, and
It
you
was a
mentioned
real privilege.
you mentioned how the two things you ask anybody who interacts with you professionally is dependability and communication, right? I remembered what you said.
Great memory. Yes,
And
it's very true.
if you are dependable and you communicate and you show up, roll up your sleeves and willing to learn, there's no shortage of things for you to do, right? Like you find, we both know this from direct experience. You get your hands on somebody who is dependable and communicates, you will find work for them. You'll create work for them just to keep them in your orbit. So integrate that across the economy. Um, you know, I think that's what I've been trying to drill into my kids, and they roll their eyes and look at their phones.
Well, part of why I'm asking this is somewhat selfishly because I have children like you. Mine are a little bit older than yours, but they're actually in college, graduating college and emerging into the world. And I'm actually honored that you remembered my dependability and communication mantra. It's a real honor to hear that actually stuck in your mind. And I agree with you. I think that's true no matter where you decide to work. But to a recent college graduate, asking the question of, hey, where does the opportunity lie in the economy right now? I'm presuming you would say, look to energy. That's going to have tailwinds behind it for decades.
Look to any of the trades, but energy is certainly one of those. I would, it's going to be difficult to understand the full impact of AI and what work will need to be done by humans in the future. So for that reason, I think, this is a whole separate topic, but I think there's a mega trend that's going to occur, which is as humans are relieved from labor, there's going to be a much higher premium on anything that is authentically human. But that's a whole other conversation. I think there's a bull market in uniquely human content. But my main advice to my kids, and if your kids are listening, is to be flexible, to be willing to learn, and be willing to work hard. You cannot choose a career and expect to stay in it for 60 years anymore. You cannot choose to work for one company and expect that company to be paying you to do the same thing in the way that we used to do for decades. The doubling time of technology is shrinking, and soon it'll be measured in weeks or days as opposed to years like it is now. That's very profound, hard to model, but in all scenarios, people who are willing to learn and willing to work hard will be in high demand. That's our view. And why risk otherwise?
Doomberg, if you don't mind, I'd like to make an appeal to the audience here that folks, if you would be interested in hearing a conversation between Doomberg and myself, really diving into his prediction there that there's going to be a bull market in all things uniquely human, let us know in the comment section below. And if there's enough interest, I will reach out to Doomberg to see if he'd be willing to come and maybe do a special video around that topic.
Absolutely. And it's a very deep one. So we could fill an hour with that easily.
Okay. Yeah, it's this whole concept of meaningful work that provides, at least enough of a financial return to be able to, meet a middle-class lifestyle at least. But also just to have fulfilling work to step into, because purpose is so important in terms of what truly drives our happiness as humans. There's just a lot of people out there that are finding it hard to find optimism on that. And so if we can really, shine a bright light on where the long-term opportunities there are there, I think the audience will like that, especially those who have adult children that are asking that question.
Absolutely.
All right. Well, look, as we wrap up here, you've talked about this future where we're really moving towards an energy football team where the players are trained to play as many positions as possible without demanding too many increases in their salaries going forward. We talked about the opportunity that nuclear offers. Where else, as we head towards that future of almost interchangeable players, where else do you see really big opportunity for investors over the next couple of years?
So it's a fascinating question, and we've been observing this AI thing. We wrote a piece, I think maybe 5 or 6 months ago, called Fission Chips, where we talked about how
Mhm.
AI would
Best title ever, by
normalize.
the way.
I have to give full credit to Grant Williams, who came up with it, our friend and mentor. But there's a scenario where, so what's going on right now in the market is we're seeing, these utility stocks soar on the AI trade. Like this is the next AI trade, right? Um, there's a deep philosophical question, which could be a whole other appearance, which is what is electricity worth? It's not worth what we pay for it, like 11 cents a kilowatt hour, 15 cents a kilowatt hour. That's the price we pay for it. But electricity is the ultimate public good. It's regulated and it's radically underpriced relative to its value.
Right. Just like water is right now,
Just like
too.
water is. Exactly. And so you and I, for example, for our businesses, since my business is to be on the internet all day and the internet requires a functioning computer, we would pay vastly more than 15 cents a kilowatt hour for surety of supply of our electricity. We're fortunate enough to be able to afford it as well, but not everyone is, and not everyone needs it. And there's a world where, um, like, I don't believe the capacity to produce more electricity is going to keep up with the incremental demand that AI needs, and AI won't be denied, and so somebody else has to. This is really hard to model, but this is what's coming. This is the gut feeling that we have, for investors to ponder. What does that mean? Who is going to give up their supply? What does that mean for the people that will benefit from being able to produce marginal supply? For example, mobile natural gas power plant producers, where you can literally just roll into the Permian and produce electricity on site, even though it's expensive. Like electricity is a public good, and its value is far greater than the price everyone's used to paying for it. And how that disruption manifests is actually really one of the deeper questions I think we're going to be forced to confront in the months and years ahead. And I don't know who benefits and who loses. But if an investor can get ahead of that, there's going to be ample opportunity both on the long and the short side, in our view.
All right. Fantastic. Gosh, there's so much I'd love to continue digging in there, but we are pretty much near the end of the hour here, Doomberg. Fantastic update on the world energy situation. I guess before I get to the last couple of questions, is there any other key topic trend that you've been writing about right now that you think is worth putting on folks' radar that we haven't touched on yet?
Yeah, we're diversifying a bit at Doomberg. We came of age during an energy crisis, and so people think of us as an energy publication, and mostly we are. But we recently put out an interesting piece that has been well received on cancer. We have a deep interest in that space. The sort of back to the whole, what humans will do when we have ample energy and ample time. Solving various health crises is probably top of the list. We're probably going to write at least one health-oriented piece a month on the Doomberg platform going forward. We put out a pretty provocative piece called Survival as a Service, talking about the incentive structure of curing cancer versus treating it and the fundamentals of cancer and do we really understand it. Working on a piece on diabetes right now. So that is an interesting thing. We don't want to just be energy because it's also fun to write about other things, and we have some good research horsepower on the team, and so we want to deploy it to other things. And then, of course, we're keeping a very close eye on the European political crisis. I think Europe is a much bigger powder keg even than the U.S. We saw this assassination of a European head of state for the first time, and assassination attempt of a European head of state, Futsi, in Slovakia, and we saw this eruption in Spain over this sort of far right, hard right campaign. The summit that they had down there, the European parliamentary elections are coming this week. Keep a close eye on that. Germany coming, the piece we wrote, Coming Apart at the Seams, basically states that the green energy agenda is fundamentally incompatible with democracy because it's unpopular, and democracies are popularity contests. So lots to talk about in future appearances, Adam. And like I said at the top, I always love talking with you, mostly because the time flies. And I just looked up and saw that we've been at this for more than an hour, and it feels like 10 minutes.
Exactly. Well, look, I do want to just say on on your now expansion to other topics besides just energy. Having met the team behind the chicken there in person, I was very impressed by the scientific credentials of the team, just how advanced and impressive they are. So I'm sure the audience here has already detected that from your long work at Doomberg, that you're clearly a domain expert. You know, but not just in energy, in many different science-related fields. So I look forward to reading those publications. All right, Doomberg, well, look, total pleasure. So obviously, key question to ask is, for people that have really enjoyed this conversation and would like to follow you in your work, where should they go?
Doomberg.com. We recently ejected a squatter from that wonderful domain, and so now we're the proud owners of Doomberg.com. You can find our newsletter. You can find all of our podcast appearances, including this one. You can find our pro tier, where we do a monthly fixed presentation that does a deep dive on subjects. We talked about geopolitics and war in the April Doom Zoom. We had Mark Nelson in to talk about the global nuclear renaissance for the May Doom Zoom. For the June Doom Zoom upcoming, I'll probably do a deep dive on each of the big major shale patches in the US and talk about the differences between them and how that's driving both the national supply-demand balance for oil and gas and also the global supply-demand balance for oil and gas. And that'll be a fun one. These typically run about an hour, and it costs a little more than just the articles, but they're worth it for our pro subscribers who can afford it. But that's basically all we do. Doomberg is the work of our lives, and we love doing it every day. And, what a pleasure to be able to come in, research, write, edit, publish, defend our pieces, and then promote them on podcast appearances like this. And so truly blessed. We were blessed to host you, and really amazing to watch your growth as well. And congratulations, by the way, it must be said, Thoughtful Money has been one of the fastest growing brands in the content space I can ever remember. You really have charted something new and great here, and it's a real joy to watch you succeed to the extent that you are.
Well, thank you, my friend. It is definitely a mutual appreciation society, and I do look to you as one of my mentors and models. And so in many ways, any of the success that Thoughtful Money's had so far has been trying to follow in your big footsteps, three-toed as they are. All right. Well, look, very quickly, folks, I've got one last question for you, Doomberg, and that is, in your illustrious career, both pre and post donning the chicken moniker, I'm sure you've learned a lot of valuable lessons along the way, either ones that were imparted by a valued mentor or maybe one that the School of Hard Knocks just beat into you over time. And I'm curious if there's a lesson you've learned along the way that you would be willing to share with the audience here. I'll give you 30 seconds to think about it as I do just some quick housekeeping. Folks, if you've enjoyed this conversation with Doomberg, look forward to having him come back on the program again, both to update us on energy, but also perhaps to do that deep dive into employment opportunities, and things that are uniquely human. Please vote your support for that by hitting the like button, then clicking on the red subscribe button below, as well as that little bell icon right next to it. And a reminder that we're now less than 8,000 YouTube subscribers away from hitting that important 100,000 subscriber milestone. And in addition to getting the fancy plaque that YouTube will send our way, it also helps the YouTube algorithm give additional love to this channel. So if you're watching and you haven't subscribed yet, please do subscribe to help us hit that milestone. Secondly, if you're thinking about making some investments or looking into investments in the energy space, and would like some guidance with that, highly recommend that you work with a good professional financial advisor to both leverage their expertise in terms of any ideas they have, but certainly their guidance and how to deploy that in your portfolio, how to evaluate companies, whether they be owning individual companies themselves or ETFs, what size position to take, how to maybe hedge that portfolio if necessary. So if you've got a good financial advisor who can do that all for you, great, continue working with them. But if you don't have one or you'd like a second opinion from one who fits that mold, consider scheduling a free consultation with one of the advisors endorsed by Thoughtful Money. To do that, just go to thoughtfulmoney.com, fill out the short form there. The advisors will be in touch with you shortly. Also at thoughtfulmoney.com, that's where you can sign up for our free newsletter by clicking that newsletter link up there in the site menu. All right, Doomberg, we're back to you. Is there a particular lesson you've learned along the way that you think is worth sharing?
I'll give you perhaps a counterintuitive one. When I graduated my undergraduate studies and began to pursue my PhD, a mentor of mine, a late uncle who I've always looked up to, who's been profoundly impactful on my life, pulled me aside after college graduation, and I had a good run in college, and I'd gotten into a very good school that you would know, and pulled me aside and he said, do me. It's not what he called me, but one of the things you're going to have to learn is how to manage your success. And that's not something that we give enough thought to. I'm assuming many of your listeners, and I know you, and you could characterize us in the same way, sort of type A drivers, success-oriented, willing to put in the time, willing to work, have achieved some semblance of success, learning how to properly manage your success, to balance the growth of the digits on the screen with the growth of happiness in your life, is more challenging than many people assume. And in fact, he said to me specifically, and these are words that I have never forgotten, is it'll be easier for you to accumulate success than it will be to manage it, unless you proactively get ahead of that and start to ponder what you would do, what defines your success, when is enough enough. And we're confronting that challenge with Doomberg. It's been amazingly successful. It's been life-changing. We love it. And we have, one of the things I'm most proud of is we've taken the time to enjoy the success, to not let it get to our heads, to take risk out of our family's financial futures, to not chase growth for the sake of growth, to build Doomberg on brand in the way that we want to be proud of it. Proactively investing time in thinking about and/or directly managing the success that you have been able to achieve in life is just as important and often overlooked in the path to trying to achieve that success in the first place. And so that's a piece of advice that I would give, and hopefully that was useful.
No, absolutely. I think that is a hugely wise bit of advice. And first off, having traveled to the chicken coop and seeing how your team has optimized the balance between your business and your life, and how much of the design of the business was intentionally thought through before Doomberg even became the large success that it is today. So your success has been on your terms largely since day one. And to see the enviable balance you have in terms of what you let the work demand of you, but when you step away from it and enjoy the success it's enabled for you to be able to do other things with your life. I took away a lot of notes. I mean, pages and pages of notes from my visit there. And, you know, with my kids being at the age that they are, I for many years now, I've heard sort of the haunting refrain of the Harry Chapin song, "The Cat's in the Cradle."
Yeah.
You know, which is basically about the workaholic parent who, you know, finally has time in life and turns around to spend time with his kids, and they're too busy for him now. And basically he's just given them the impression that work was more important than their relationship with him. So, you know, I'm always haunted by as hard as I work for the company, trying to moderate that and make sure that I make enough time for the truly important things. Because work by itself is it's a how, right? It's not a why, right?
Yes.
It's a
means to an end.
It's a means to an end, exactly. And my wife is a couples therapist, and we live out here in the Bay Area. I mean, a lot of her clients are hugely successful, you know, Silicon Valley types, and we're talking about success in the order of magnitude of hundreds of millions or billions of dollars in net worth. You know, some of these people run companies that we read about in the papers all day long. And a lot of them are incredibly miserable despite their immense success, and oftentimes because of it, right?
Yeah.
They're too wrapped up in the mania of what they're doing to be able to, you know, have a functional balance in life, and it just destroys their relationship. It destroys their own sense of happiness. So anyways, I thank you, because I think that's an extremely valuable bit of wisdom.
Yes, that the disease of more is hard to resist. That's what I'll leave you with.
Very true. I love that. The disease of more. All right, my friend. Well, look, this has been yet just another phenomenal conversation. Thank you so much. Look forward to having you back on the program soon, Doomberg. In the interim, look forward to continue reading your excellent publication there at Substack. And folks, I highly recommend, if you're not reading Doomberg, you go out and subscribe right now. I'll have links to Doomberg.com in the description below this video as well. And Doomberg, when I edit it, I'll also put that right on the screen there for so folks know exactly where to go. But thank you so much for your time. Everybody else, thanks so much for watching.